Stephen Feldman, if the fiscal cliff is solved, is that good or bad for gold?
Today, trading activity on the margin of the price is based on that bet, just that bet alone. So if it were to get solved, I suspect that would be bad for the gold price. And again, we serve the investor, so there's just so much uncertainty going on in the world, whether it's in the Middle East. The fiscal cliff doesn't solve the deficit problem, it doesn't solve the debt problem. It's a step in the right direction, probably not positive to gold, but that's not the whole thing of the gold price.
All right, so it sounds like gold's going to win either way.
Well, we've never subscribed to any one event being the answer to a gold price or to a long-term holding of gold. It's a 5,000-year-old asset. There's lots of reasons you can win with gold. Chinese GDP growth. The new government in China has pledged to double GDP growth and per capita incomes between now and 2020. Chinese are buyers of gold. Chinese and Indians have bought half the gold for the last 10 years. Just that trend alone sets a floor on pricing, and that's not including central bank. That's not including hostilities in the Middle East. That's not including more gridlock on other issues that are going to go on in the United States government.
Well, speaking of hostilities in the Middle East, that's the other big story right now. How much does that factor into gold prices in America?
Well, there's the short term. Again, the trader's answer would be any sort of disruption or crisis in the world is always gold friendly. In the longer term view of this is anything that's negative for oil prices. If oil prices were to go up, there's typically been a correlation to gold prices. It makes it that much harder and more expensive to mine gold. So supply gets constrained, prices will typically go up alongside. What everyone worries about is what does this small conflict in Gaza and Tel Aviv metastasize in a new Middle East, where there are different allies, different U.S. interests. So again, what starts out small, history shows you what starts out small can turn out to be quite big, and that could have a meaningful impact.
And finally, you deal in physical gold. Next Friday is Black Friday, big shopping day. How much does this affect the gold price in America? Do people go out and buy jewelry on Black Friday, or are they just looking for sales at Walmart on toys for Christmas?
I would hope that they would be more inclined to buy something that has enduring value than something that will be out of fashion or out of technology use within 9 months, but I am not optimistic that that will be the case. There will be their fair share of jewelry, but the investment demand for the most part has been driving the marginal price of gold and the marginal ownership. I don't think Black Friday is going to be a big investor day, probably a slow day for us while people are focusing on other things and their Thanksgiving hangover.
This market has fewer players.
We're coming into a Monday where we're going
to enter in a new stage of tech.
It's a stock picker's market.
Welcome to the 5 dumbest things.
Apple reported earnings